Guys, happy Friday. It's November the 18th, and we're getting a little bit of rally. And David and I have been calling for a Santa Claus rally, but we'll see what the street actually allows us to do. Today, we're going to talk about ROST stores and Baba instead of just faking like I'm going to talk about Baba. I'm not actually going to do it this episode. Sorry about that from last time, guys. It's going to be a little bit controversial because I think I'm taking the side that the street is not on this. And I don't understand why, but we're going to go through it. And you guys will always have to make your own investment decisions as per usual. Past performance is not indicative of future returns. Let me share my screen and get to it. Here's what we're seeing on the indices. You've got basically these guys dancing around flat. And what I will say is that I've listened to right under 300 calls thus far. Maybe I crossed 300 today. I don't know. Doesn't matter. The point is that these companies did, largely speaking, report better than expected, but especially in industries where you have direct competitors, there is a winner and a loser. And it's very interesting because we go into the fourth quarter, and if you're a bit of the loser, for lack of a better way to say it, you're not in a great circumstance going in to the fourth quarter because your strategic competitor, by virtue of actually doing much better than you, is actually significantly better positioned for what typically is one of the higher sales quarters, period. So it's going to be a very volatile versus a very calm period as we enter into the January season. Oh man. And I really think it's going to be a day trader's market. Still, the volatility is going to continue. I'll use that as a promo to talk about my colleague, Richard, who is just an unbelievably talented day trader. Please check him out. We have links in the show notes if you're interested in that sort of thing. If you're an investor, though, it does suggest that there will be wonderful opportunities to get the stocks that you love, that you've done research on, et cetera, at the price you want, even if the thing is rallying up one day and down the next. Okay, let's take a quick look at Finviz. And one of my other favorite sort of things that I look at. Here's the heat map. You can see it's very mixed. Large cap up, down every day. It's kind of silly. I think your reasons for buying large cap will be very different than your reasons for everything else in the S&P 500. Energy is trading down because for whatever reason, oil is dropping below 80. Now, I've told you that you can game this through November, but come December, you're going to find out very quickly whether it's cold or not cold. And then you'll start to draw down whatever it is that you have in storage or otherwise you're up, and then we'll see what's up. And it's as simple as that. So right now, this game of chicken that we're all playing in the oil markets, interesting and absolutely expected. You can take a look at last year and see what happened. You can take a look at actually any year, the month of October through December. And then as soon as weather starts to do what it does and heating oil starts to do what it does, and if you don't get a slowdown in GDP to try to compensate for that, that'll be the end of that, so to speak. All right, now let's go through what I've got prepared. Next week is Thanksgiving. So really from now until January of next year, if there are names that you've wanted to own long-term, you want to watch and wait for the opportunity to get them, because you will get them on sale. Like, there will be a holiday sale and there will be a Santa Claus rally. Potentially, both are possible. Let's actually talk about ROST stores. The street is bid this thing up almost like 15 points, 20 points this morning. Crazy. And I was like, oh, okay, cool. I'm glad I have strangles on. And I was about to lift one of the strangles, one side of it. And then I was like, actually, I should turn this into a short position, because it had no business trading up to 315, or it had no business trading up as far as it did. It had no business being at 115. I'm just going to tell you that now. At 115, it's over 20 times at this point. And let me explain why that's the case. Top line revenue was more or less flat, 4.5 versus 4.5 year prior, right? And then we got some change behind the number there. But earnings, EBIT, I'll give it to you at EBIT, right? Because you had to go all the way through, demonstrated that there was a problem. You know what I mean? You could take out the 18 from interest income and you're still coming in weak on operating income. And she talked about this on the call. She said, look, we realized that maybe we were a little higher priced than our competitors on some things, so we had to lower pricing. And if you look at COGS, it's only 3%, but that scares me. And I'll tell you why it scares me, because the whole thing with her was inventory control. How's she going to manage it and what's she going to do? Let me show you that in a second. But net earnings, when you come down here, you still have a 10% decline despite lower taxes on the same revenue, right? And so on and so forth. So this is not down 10% in the third quarter when TJ Maxx managed to expand operating margins with the same kind of sales experience is not great. But even more problematic for me personally is that unlike TJ Maxx, which has no inventory issue and has demonstrated very clearly that its buyers are next level, like what they buy, they sell at the targeted cost of goods sold that they anticipated to sell it at. And also, since mostly they've been selling it at the price they needed to sell it at to make the margin that they needed, they really weren't so aggressively, even though they did. Okay, we can go back through the quarters and see this clear as day. Ernie Herman is a baller CEO, but he went back and he reduced operating income nonetheless. And now he has plenty of room to reduce operating income. But let's be really clear. We're going into the fourth quarter. So I care what your inventory is if what you just told me in the third quarter is that you had to reduce prices. Okay. You had to reduce prices going into Christmas versus, so let's look at what actually happened to inventory and let me put it all together for you. Here's merchandise inventory. This is actually the smallest increase in inventory for all the retailers that I've looked at so far. Okay. Every single one, even Target, as much as I whined about them having a little bit more inventory than I would have liked, this right here, this isn't an increase in inventory barely. Okay. Last year, by the way, you had supply chain issues, just to give you a sense for how low this number is. And also we've had inflation on your inventory. So what is going on here? Now, people asked him this question. She answered it a couple different ways, none of which made me feel like she really clearly spoke the words, I love the inventory we have and we will definitely get margin on it. Not a word was said that would really give me that confidence. Listen to the question and answer session yourself if you don't believe me. All right. So now let's look at the cash flow statement because this is really important. Merchandise inventory. Okay. A little bit there. Most of what she did was she paid off. Okay. Wait, hold on. Actually, I'm going to show you this. Look at the cash position. Down $1 billion and change. What'd she do? She only did about 200 and change off of inventory, but she bought back shares. Okay. That's her use of capital. Why, honey? Why not buy some inventory that might make us some money? Sorry, I shouldn't say it like that's really condescending to a woman who probably has a significantly better career than I have, but I don't understand why you would do this. Why did you do this, right? And then you paid back your debt, which I don't have a problem with. That part's fine. But given that you were doing this so aggressively, this probably wasn't the right call, given that you need to make money in the fourth quarter because the consumer still has money. We don't know what's going to happen next year. And by the way, the fourth quarter is the quarter that you as a retailer should have stuff, for lack of a better way to describe it. So between that and the fact that I can't tell that her buyers have it under control because they had to actually lower prices, I don't understand how you would give this any kind of multiple greater than like the other retailers out there, Walmart, Target, et cetera. Now, in fairness, it does trade. It's really hard to tell because I think everybody's going to have to adjust they're going to have to adjust their models and we're going to have to see what forward estimates fall out at. But just remember, TJ Maxx is trading about 20 something times. Once everybody gets a chance to update their model, given that earnings was down 10%, I just don't know how at these levels Ross Stores makes sense because I'm not convinced she got it under control. And if she doesn't make it this holiday season, I don't know what it's going to look like for the other 3 quarters she got to get through before this thing shows excitement to me. So that is Ross Stores. Now let's talk about Alibaba. Okay, Alibaba. Here's Alibaba, up 3% top line. And this is beautiful because quite frankly, again, have a look at all the retailers and see that this is a great outcome. Now, I'm going to show you the different pieces of Alibaba and why I'm super cool with 3%, because you can see that, Alibaba's got a lot of businesses, just like Amazon got a lot of businesses, but the manner of those businesses can't be thought of the same way. Net income up 19% is wonderful. They are definitely buying back stock. And also they have some things that they could spin out. So, and there's lots of reasons for them to do it. And there's lots of reasons for them not to do it. Depends on what it is they ultimately want to continue to evolve into. What I would say as well, by the way, is that part of the delay with Baba, which I still think is hecka cheap if we have any kind of lift, All right, let me take it off share for a second so I can actually get this as a clip. Here's the thing with BABA. This thing is cheap. It is undisputedly cheap, no matter who you are or how you're doing your analysis, but it does have one little bet in it that will override every single thing and is what the discount in BABA is about right this minute. And that is either you believe China is going to continue to be peaceful with the United States or it's not. Yes, it is a VIE structure. I'm no dummy. Come on. Like, you go back to my videos from January before people were even talking about that, and you'll see that I have a whole set of videos on that. So, but at the same time, BABA itself as a company, great financially. Okay. It kind of is what it is. And I'm going to go through that in just a second. Additionally, where they stand strategically is one that if everything works out, this is going to be the cheapest you're ever going to be allowed to buy BABA at. Now, if you can buy the ordinaries on the Hong Kong exchange, do that for sure. I'm going to use the US ADR because so many more of the viewers that I know aren't able to buy it on the, or aren't able to buy the ordinaries, but the ordinaries give you a better share class. Let me say it that way. Now let's get into what happened this quarter. Okay, here's BABA, 3%. Net income up 19%. A huge, some of that is from the share count, but fair and square, we went from a loss to a gain. You got to look at RMB because once the currency translation happens, it all looks a little bit crazy and wonky. Okay. And quite frankly, this company should never be valued in US dollars because it is a Chinese-based company doing everything in Chinese dollars. And additionally, the weakness in the renminbi is probably not long in tooth. I mean, it literally is based on COVID and that's it. Because, you know, with the euro doing what it's doing and Europe doing what it's doing, I mean, you got a couple choices if you're a foreign country and what currencies you'd like to hold in reserve. So you really have to believe China's going backwards forever, not forwards, to really have a certain type of viewpoint. But let's move along anyways. Here's the earnings mix. And I don't know that everybody's had a chance to really understand. I think people only think of BABA as a retailer. And for a lot of people, I think they overestimate massively the international commerce portion of BABA. Here's what it looks like. 135 billion, I think, in millions. Yeah. So this is 135 billion RMB, divide by 7. If you're trying to do the math quickly, divide by 6.5 on a given day, depending on what it is. And then this is what they do in international. It's a drop in the bucket, right? Okay. It's a drop in the bucket. It could grow. It could grow really, really well. And realize Cainiao, which is the logistics firm that they collaborated with, well, collaboration isn't quite the right word, but it's their logistics business that essentially flies out of Hong Kong and can service the entirety of all the way through, I think, through the Middle East in about 4 hours is about what they're looking to try to do. So if it comes from China, stick it on a high-speed train, put it in the Hong Kong airport and fly it out to wherever. I believe from what I had heard when this project was underway in 2017, that they believe that they can service about 50% of the world's population in about 5 hours or so. That's what they were going for with this Cainiao. And it is doing incredibly. In fact, they were asked more than once, hey, you going to spin out Cainiao, given that 70% of its business has nothing to do with BABA? And they were like, no, I think that's what we want to do, right? So to speak. So that's just, this thing is really, it's now EBITDA positive. Okay. It's still running an L because it is a newer business for them logistics wise, but that's not going to last for any kind of meaningful time. Let's just call it what it is. This is a prized possession right here. And then here you can see that the Chinese business is actually profitable. The international business is just stringing along right now. So it is an income loss. And you can see it also is a pull from cash flow using EBITDA as a proxy for the cash flow statement, which I did not copy up here. And yeah, I mean, look, there's nothing wrong with this business. If we get any benefit here, right, this thing goes straight up. And with that, I will stop share. That's my thoughts on BABA and ROST stores this morning. I texted you bright and early, David. I was like, this is short ROST stores.
Yeah, I mean, spot on. I mean, it was 114 when you texted, and it's now 107.69.
Yeah.
Yeah. So let me just read what they're saying. Earnings upside was driven by broad-based strength as sales gross margins and SG&A all came in ahead of expectations.
I don't know what their expectation is. This is why the street drives me absolutely crazy. What exactly is your expectation? Were you expecting something very different for this company versus all the other companies? Because it sure did look like to me they did as good as Target, but worse than others. Like, you know what I mean? I don't
Right.
understand these people.
But your main, I guess, what you observed is that instead of buying inventory for her largest time of the year, she bought back stock, right?
What? I'll tell you one thing I will know. I will just go ahead and say it. I know people on Wall Street will hate my guts for this, but as long as I've been doing this, right? And I've met a lot of people in this business before I decided to peace out. Okay. There are so many more men doing retail than women as analysts, and not a damn one of them seems to have a sense for what it means. 60 over 60% in literally every single category demonstrates clearly, and it's been the case for decades, not just the most recent decade. Women are your consumer, and yet you still have all these male analysts reading it, being like, that was a great quarter. I don't understand it. I don't understand how any person looking at this could be like, this is a great quarter. I'm really excited about your prospects for Christmas. This looks horrendous for Christmas. This is exactly what I wouldn't want to see for Christmas. I would be totally cool if you would have spent all that on inventory and then told me with a straight face, I'm going to sell all of this. I'm going to get a really good price for it because I'm sure. Instead, what you told me was our buyers are monitoring this because it's a very changing and adjusting it's a very adjusting environment approximately. Okay, y'all go to the transcript and find what she exactly said. Now just contrast that to Ernie Herman over at TJ Maxx that's telling you this category is awesome, this category is great, I love my buyers here, we're going to sell. It's just a totally different call. So who in their right mind as a retail analyst can come out with a report saying that? I don't understand it.
Right.
Now, she may still crush it for the fourth quarter, but I feel like if she does, that's her prayer to God as far as that goes. That is not a certainty that she came into this call with. Sorry, I'm getting really Southern here. I apologize.
Okay, thank you.
Listen, I'm going to do my own store check. So possibly she just isn't as charismatic as Ernie Herman is. I'll give it to her. I won't be nearly as aggressive because I'd like to see her succeed, to be fair. But man, I really think she had a rough go of it in the way that she thought about inventory. A lot of CEOs took the wrong strategic bet. It's really hard to know how long a supply chain issue that I don't necessarily penalize her for. I don't even penalize her for this. It's really the street doing dumb stuff with their estimates. It's not her. Do you know what I mean?
Okay, so you compared it to last year's inventory build or last
Yeah,
quarter?
I mean, year over year, right? Last year, she told us inventory is a problem. So you would think this year there'd be quite a bit more inventory. That's what we saw when we looked at TJ Maxx, Target, Walmart. All of them talked about the fact that you can't, when you comp to last year, you gotta be a little careful because we had, a big problema with the crates coming off of LA, so to speak, if memory serves me, right? Okay, so the inventory build this year, if you have it under control, should be great. Now, everybody even before this quarter, last quarter was like, yo, this stuff's coming off the boat a lot faster than we expected. The only person that was the exception to that was TJ Maxx, who was like, yeah, I can sell this. Don't worry, I got this, right? He's the only, and he did have it. That's what he demonstrated this quarter. Ernie Herman's badass. I don't really know, watch my language. He's done a really great job. Let me say it that way. Look, do I think TJ Maxx is a stellar buy right here? I'm actually calm it down because I just don't know what this market wants to do in general. But if you were like, May, who's the best retailer right now who has demonstrated awesomeness? It really, I mean, Ernie's got to take one of the top slots for sure. He has navigated TJ Maxx better than any other retailers navigated this environment. The only exception might be Costco, but I mean, that's a really different business. And I haven't had a chance to listen to that call yet to comment, but you might hear some positive comments on that too. Yeah. I mean, this is not to throw shade on others, but this is really throwing shade on the street.
Great. Yeah, I agree. Okay, thank you.
It's the world's toughest environment. Anyway, but Baba, really, I do think that if you were a betting man, which all of us are that are in the markets. Let's call it what it is. But if you're a betting man, you do want to find places, even at $80, even as much as it's moved, realizing that this thing was still undervalued. If things resolve with China, it is undervalued even at $120. You know what I'm saying?
Right, right. Well, you look for market to make mistakes and then you take advantage of them.
Yeah, this
Hopefully,
discount is 100% concerned with China and us going to some bigger conflict.
Gotcha. Okay. Talk soon.
All right,
Thank you.
bye guys.